Hey guys, what's up? And now we're gonna watch the SMC video of how to trade in the best order block. And let's go.
Now, order block is a term from SMC. An order space-specific zone. What happens there is that the big players, i.e., institutional buyers, or, hedge fund houses. There are hedging funds, there are profit companies. All these big players, small traders like you and me, we call them retailers. How much money do we trade with? 1 lakh, 2 lakh, 10 lakh, 50 lakh, 1 crore at the most, okay? If someone is ultra rich, they trade with 10 crores. They can even trade with 50 crores, okay? But how much money do the big players trade with? They trade with 10,000 crores, 15,000 crores, 20,000 crores. So, if someone is trading with such a large amount, do you think they'll just come into the market, place an order anywhere, and then make their profits and losses? No, brother, understand the meaning of smart money. This smart money concept itself is telling you that investing money is a thoughtful investment, right? So, brother, big players invest their money thoughtfully, not like you and I, who think, hey, 2 candles are forming green, brother, the market is bound to go up. He clicks buy and what happens? Then the market plays tricks on you, right? Why is it? Because you lack market knowledge. You don't understand the nature of the market, where to look for entry points, what is market sentiment, and what is structure mapping. You don't know all these things. You don't understand the trend, so you get trapped. So, what big players do is have a specific price range. We start filling our orders in it. And after that happens, the price movement shoots up dramatically from there if there's an uptrend. And if there's a downtrend, it dumps dramatically. Right? So it must be happening from somewhere, correct? We've figured out that it starts from a specific zone. Now, which zone is that? That's the zone we call the odd block. Right? That means a location where operators of big players, or big players, smart money, have large orders placed. Right? So, what does the price do? After filling, it moves dramatically from there. Why? Because after heavy volume trading there, after there's liquidity, the price shoots up or shuts down if there's a downtrend. Such a zone is called an order block. Now, what does this zone mean on our chart? That zone means a specific candle on our chart. Right? If there's an uptrend, it'll be the last selling candle, and if there's a downtrend, it'll be the last buying candle. Okay? I'm not coloring it right now. I'm explaining it to you. Okay? If you want to color it, we'll do that too. Okay? But, yes. Okay. So, what happens is, look, an order block means that if the market is currently in an uptrend, what does the market do? Like, the market is coming from here, okay? What does it do from here? After reaching a zone, after reaching a specific location, it allows price movement dramatically from here, okay? It goes on, breaking all the previous important highs. What do you realize? There's something in this zone that's caused the price to shoot up. We'll understand that there's something here that's causing the price to shoot up. What is that? An order block. Why is an order block created? Because the big players enter here and cause the price to move dramatically. Okay? That's the upside. Then how about the downside? How about the downside? Understand that the market is in a downtrend. There will be a location. After reaching this point, the price will dump dramatically. Okay? Why? Because the big players have selling orders placed here, and they are placed in heavy quantities. Due to the heavy quantity placed here, the market gets a push downwards. If there is a selling order, then the market keeps creating and dumping all your orders dramatically. Okay? So, now you understand what an order block is. Okay? Now, where are these order blocks formed? What are their rules? We'll learn all these things one by one. Okay? Now, you understand what an order block is. Now, understand what an order block looks like. Okay? Let's assume these are a few candles. It will be a week for now. I'm not drawing that, but I'm explaining the concept to you. Okay? So, what happened here? What was happening here? Until now, the market was moving downwards. Suddenly, the market took a plunge from one location. Okay? So, now you understand what happened at this location? What do you see at this location? You might be able to see that there's an order block at this location. Okay? Now, how does this order block form? What are its rules? What's not? We'll understand all this on the chart. I'm just explaining the concept to you. Okay? So, if you want to find an order block in an uptrend, you need to find the last selling candle before a dramatic move. Okay? You need to look for the last selling candle. That's your order block in an uptrend. Okay? And I'll tell you how to look for it in a downtrend. Now we've understood how to mark a bullish order block. And now let's understand where the bearish order block is located. See, whenever the market is in a downtrend, it sets a lower low and a lower high. So, this lower high, which is our last buying candle in this zone, is our bearish order block. Okay? So, when the market comes back, it dumps again from this level. We'll understand that entry point later. Right now, we're just understanding what an order block is. What did we understand? The last selling candle in an uptrend and the last buying candle in a downtrend, these two things are order blocks. Okay? Now we've got a basic overview of what order blocks are and where they meet. Now, let's understand the rules of an order block. Rule number 1, color doesn't matter. Okay? Whether it's a bearish or bullish order block, color doesn't matter. What we've learned is that if you want to go to the bullish side, look for the last selling candle, and if you want to go to the buying side, in a downward bearish trend, look for the last buying candle. What do you need to understand about this? You need to understand the psychology of candles. For example, I told you earlier about the rule that color doesn't matter. Now, what does color doesn't matter mean? Let me draw one here. Now, let's understand that there's an order block here that has created the breakout structure above. We've done all this. Now, what is this breakout structure? I'll make a request to you. If you're coming directly to this lecture, you won't understand it. For that, you'll have to watch all my previous episodes first. How does a breakout structure form? What is an IDM? What is market structure? What is fractal nature? You'll have to understand all these things. Only then will you understand them. And then you come to the part about order blocks and FUG, because if you have incomplete knowledge, you won't understand it. Because I've explained those things in all those videos, things you won't find even on YouTube. And even those who roam around on Instagram these days pretending to be SMC traders don't know this. Why? Because they only know about order blocks and FUG in the name of order SMC. They don't know the deeper details, because if they don't know, how can they teach you? I personally follow Sir ICT. Who is ICT? The inner circle trader named Sir Michael J. Hedleston is the creator of SMC and ICT. He is the father of SMC and ICT. He developed this strategy. He has 30 years of experience in the market. So, if you want inspiration, then follow people who have created something. Not that you know about order blocks here. This will tap into your market and move it. What's the psychology behind it? Explain this to your new traders. Don't just do this to sell your course, okay? I'm not against selling courses. Again, understand, but in the name of a course, you'll only teach the basics, which are already available in the market. You just have to find them and learn them. Look, you won't learn the free stuff at all. You'll have doubts about how the person is teaching, how they're not teaching, whether they'll teach you fully. And if you've paid for it, you'll immediately know your psychology is there. I've paid, I want to learn fully. You put in the dedication there. Why? Because there's money there, brother. A lot of knowledge is available for free too, brother. You should find out. That color doesn't matter. Now, why am I saying this? Okay, I'm explaining everything on a diagram right now. Next, I'll take you to the chart, because it's very important to understand the diagram theoretically first. Okay? Just like this chart has been created. Okay, this is a chart, just like this chart has been created. What we've learned is that if the last selling candle is in an uptrend, the order block is there. So what do you say? Which is the last selling candle? You'll say, swap no buy, look, this is a red candle, this is a selling candle. But if I tell you, no, this isn't a selling candle, the actual selling candle is this one. Quote, how will you say that? You're crazy. Do you understand anything? Hey, brother, what am I saying? Listen, understand now. Look, understand the psychology here. This candle is definitely a green candle. Of course, this is a selling candle, but what happened in the next candle? You understand that. This is a green candle. Okay? Where did you find the opening here? It's found below here. Where did we find the closing? We found it above. Where did we find the opening? We found it below the previous red candle. So, what happened? There were sellers somewhere in this zone. Correct. That means selling occurred in this zone. Correct. Something happened between this candle's closing and opening, causing the price to open below the previous candle. Correct? So how can you say this is a selling candle? Of course, there's no doubt that the candle closing may be a bearish candle or a selling candle. But actually, if you want to mark an order block, this is the last selling candle. Why? Because this candle saw more selling in this candle than the previous candle. Correct? Now, let's assume it stayed like this and had a wick, it would still be valid. Why? At the end, psychology says that the next candle saw more selling than the previous candle, correct? Even though the candle closed higher, selling occurred somewhere. So, for us, this is a selling candle, not this one, right? That's why I say the color of the candle doesn't matter. The psychology of the candle matters. You should be able to understand the psychology of buying and selling, right? If you don't, sit down and I'll teach you on the channel. You just need to observe, right? You understand that this is an order block. This candle is your order block, right? Let's change its color. This candle is an order block, right? Right? Now we're considering the downside. How will it be on the downside, right? So, let's say he was creating a chart. What did we understand? The color of the candle doesn't matter. We've seen the bullish side, which is a valid order block. Now we'll look at the bearish side, right? What's happened here? Look, the market has entered a short-term uptrend and then suddenly dumped. Okay, so, we understand that an order block must have formed here, correct? Which order block is this? There are many rules for it. FG, overlapping, and, PDRs. We'll discuss all this later. But now, let's learn to identify order blocks and what the psychology is. Okay? What does our rule say in a bearish trend? In a bearish trend, our rule says that the last buying candle is before the UP move, or before the down move, right? So, which is the last buying candle in our case? Okay, you'll say, look, this is the last buying candle. But if I say, no, this is the last buying candle, you'll say, this is a selling candle. It's a bearish candle. No doubt, we've got a bearish closing here. But if you zoom in here and see what's happened. What happened with this candle here? Buyers came in. They pushed the price up and closed here. The next candle opened above the previous candle. This is a bearish candle, so its opening is higher. It opened higher. What does that mean? A buying event occurred above the buying event here. Correct? So, for us, this would be the real buying candle, not this one. Correct? Now you understand why this buying candle is valid, and why this one isn't, okay? Why this one is valid and why this one isn't. You understand this. This is psychology. Okay? So, this is the first rule. The color of the candle doesn't matter, okay? We'll learn the rest about when to validate it later. Let's understand a little about the rules on the diagram. Then, if you implement it on a chart, you'll understand how all this theoretical and real the FPG must be here. Right? If your order block is in an uptrend, right? Let's say it's doing something like this. If your order block is in an uptrend, your order block is here. Understand this. So, there must be a FG somewhere here, right? What will the market do? It will do an IDM. And this order block will tap and move again. Right? So, this is what should happen. That's covered for an uptrend. Now, let's understand a downtrend. How would it happen in a downtrend? A lower low close would be set. A lower swing high would be set. I had an idea. And here, any order block must have an FVG below it. Without an FVG, that order block is useless. FVG is a must. Now, there's another worst case scenario, which we call a single candle order block or an advanced order block. These have their own set of rules. There are also other order blocks, like the mitigation order block, the reclaim order block, the breaker block, the population order block, and the vacuum block. So, I'll bring you a dedicated video on each block. Just look, if we start one by one, we can't jump straight to 8, 9. We have to go step by step, like 1, 2, 3, 4. Only then will we understand the full picture, okay? What you need to do and where you actually need to take the trade, okay? So now you understand that you must have FPG. Whether the FPG is in a downtrend or an uptrend, only then is the order box considered valid. This is the second rule. What does our third rule say, okay? What does our third rule say? If you have an order block forming, if it's an order block in an uptrend, it should always be in your discount zone. And if you have a selling order block, it should always be in the premium zone, okay? Now, what is this discount and premium? It's nothing, brother. It's Fibonacci retracement. It's a tool. If I plot it from top to bottom, okay, the swing high to the swing low of a swing. If I mark something, the area above 0.5 is my premium zone. Okay, this is my premium zone. And the area below 0.5 is my discount zone. Okay, now, how do you apply it? You need to go to the fifth tool. After going to the fifth tool, you'll need to set your valid swing to valid swing high. Yours will look different here because it's different by default. What you need to do is go to its settings. Turn off everything here. Place 0.5 and 1 here. And change its color to whatever you want. I haven't added any color here yet, so it looks like this. So, here, my brother, this is the upper premium zone and this is the lower discount zone. So, what we've learned is that if there's an order block in an uptrend, as if the market is following a trend, if the market is in an uptrend, you should always look at the order blocks in the lower discount zone area. Avoid the ones above. These upper order blocks are useless. They trap smart money. These newbies, you know, come after learning SMC. This is meant to trap them. They only know order blocks. They come after studying only order blocks. Now that you understand, in buying, you only need to prioritize the order blocks in the discount zone. So, which one should you prioritize in selling? In selling, you need to prioritize the premium order blocks. Let me explain which ones. Suppose the price is moving in a certain direction, lower, 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 etc. Where will you see all these order blocks? Correct? First, there's an order block. Let's say this is an order block. I'll temporarily change its color to this. This is an order block. Then again, this is your order block. And this is an order block. Okay, what's happened here now? 3 or 4 order blocks have formed in a single leg. Correct? So, you must have wondered what the order block actually does. Okay, we'll understand this later, but for now, understand what the range of premium and discount is. So, understand this. If you want to sell, you must sell from this premium zone only. If your order block is in the premium zone, it's valid. The third condition is met. If any of your order blocks are being created in the discount zone, it's useless. It's a trap, so ignore it. Okay, you've understood that order blocks are in the premium and discount zones. Now, let me explain a little on the chart how to view these premium and discount zone order blocks on the real chart. So, we just explained the rules for order blocks, and let's understand them a little on the chart. This is a 3-minute chart of Bitcoin. Here, we're planning to mark the bullish side order block. Okay, so, let's do some marking. How does this happen? What happens? Okay? In an uptrend, the last selling candle is your order block. Correct? So, if we start marking here, there are more rules. Like when to mark an order block and when not to mark it. We'll explain this a little later. But right now, I'm just explaining how to mark an order block, okay? What we explained here is that if you want to mark an order block on the bullish side, it's the last selling candle before the UP move. So, look here, there's a dramatic upside movement. So, what happened below here? An order block has formed below. What's your rule for the last selling candle? So, you'd say, which is the last selling candle in this zone? Dramatically, mostly, you'd say it's this candle. But I wouldn't say it's this candle. Why? Because, look, more selling has come in this candle than in this candle. This candle has come in this candle. It has also taken the low liquidity of the previous candle. Correct? Most selling has come in here. So, that's why this order block is valid. What was the first rule? Does the color of the candle matter? Okay. This was an order block here. The first condition was met. Was the condition met that the order is blocked? Color also doesn't matter. You've proven here that even if there is a buying candle, it won't be a Vanda. The psychology of the candle is important. Just the last selling candle. Okay? So we've marked this. What's our second rule? Along with this, there should also be an FVG in the market. Correct? So what is the F here? Okay, this actually falls under the category of inside bar. This actually does not fall under the category of inside bar. So now we'll understand what the FVG is here. This first candle, after this one, hasn't closed above it. Okay, this is an inside bar. It's an inside candle. Okay, even though you've taken out its high here, but the candle's closing hasn't come. Correct. So we'll consider both candles 1 and 2 to be within this category. And what does the rule say about FG? The high of the first candle should be left out. So, in our case, this is the second candle. Why? Because, look, these last 3 candles aren't actually 3 candles. All 3 combined form a single candle. Why? Because, look, the market hasn't even broken its high yet. It hasn't even broken its low yet. Its liquidity has simply been taken away, correct? So, when is it valid? When the market gives a closing above that. Did you get a closing? No? So, it's not valid for me. So, these three candles combined are a single candle for me. So, this one candle, this second candle, and this third candle. So, my concept of a fug by combining these three candles is the high of the first candle and the low of the third candle. I've marked this as my fug. This will work for me now. Okay, I'll change the color of this fug for you. Okay, I've changed the color of this fug. What do I do now? Whenever the market reaches this level, you need to plan your entry here. We'll understand the entry module later. When to enter, when not to enter. Okay, there are all the criteria for it. We'll understand that a little later. For now, let's just understand the concept of which order block is valid. In our case, this order block is valid. Okay? Now, let's assume that this fug doesn't exist. Okay, this low of the third candle here, we took, comes in like this. So, should we mark it? So, would this order block remain valid and fug? No. Why? Because, look, there's overlapping here. It's been mitigated, correct? Look, our rule says that there shouldn't be a meeting. The high of the first candle and the low of the third candle are in an uptrend. Since the conditions have been met here, we've determined that this order block is valid. Consider it that way, okay? Now, you'll say, look, there's a fug here too. So why isn't this mattering, okay? Why isn't this mattering? Why isn't the market respecting this? Along with this, I want to tell you something. If we want to mark the candle order block here in an uptrend, what is the rule for the order block? Last selling candle before the UP move. Okay, let me move this a little to the side. Look at this, there's an order block and an FG above. Let's understand why this didn't work. Why did this fail? Okay? This is also an order block. This and this are FGs. First, second, third. Now you might say, forget this one below. There's an FG above as well. There's an order block below it as well. So, this is a valid order block for us. But if I tell you, no, this isn't a valid order block. Why? Because our third rule says that if there's an order block on the buying side, it should always be in your discount zone. Correct? So, from here, if I do this, I'll apply a fib up to the high. What do I see here? I see this 0.5 level. My FG is coming above it, and my order block is coming below it. But tell me, is this buying move coming from here? This buying dramatic move from here, did it come from here? Did it come from here? No, it's not a dramatic move, right? Where did it come from? It came from below, right? The actual move will be its actual order block and fug. What is the condition along with that? It should be FG, which is, our first condition has been met. What is the second condition? Sorry, what is the first condition? Color shouldn't matter. Color doesn't matter. We considered a selling candle. Okay, this first condition has been met. What is the second condition? It should be fug. There's a problem here. What's the third condition? The third condition is that your premium, bullish order block must be within the discount zone. It's also within the discount zone. So, for us, this is a valid order block, isn't it? So, we've understood the bullish order block. Now, let's understand how to mark the bearish order block. There are many rules for this. We'll explain them a little later. This is a 3-minute chart of BTC. Look, there's a dramatic downward movement. So, now you understand that there are order blocks above and below here that we need to mark. So, which order block should we consider? Okay? We'll understand that. First of all, what rule says that the color of the candle doesn't matter? The last buying candle before the downward move. So, which is the last buying candle here? Mark that one. In this case, this one is for me. Okay? You'll ask what kind of candle is this? It's a bearish candle. This red candle will be on your chart. It's black on mine. I've marked it. This is the buying candle. Okay? But there was more buying in the next candle, and the price went up. Although we don't want a closing, the price was more bearish here than in the previous candle, correct? So we have to give ourselves that respect. And accordingly, this is the buying candle, brother. The last buying candle before the down move. So this is the candle for us. Correct. We've marked it. What other one is there alongside this one? Again, what price action has formed here? A downward pullback, again a down move. Correct. It should close below its low. First, the first rule. Candle color doesn't matter, psychology matters. What is the buying here? There was more buying here than the previous candle, and any down move below this one closed below the low. So, this is a valid order block for me, and I can consider it, okay? We'll apply the rest of the rules later, but let's figure out how many orders belong to which order blocks and how many don't. Okay, what happened here right now? Look carefully. There was a downward move here, a pullback, one candle and down. But what happened here? This green candle, or the candle that formed after it, did it see more buying than this? No, okay? After this, it was a buying candle. Did this selling candle that formed take its liquidity? Meaning, did it see more buying than this? No, there were no buyers anywhere in this entire zone. If you look carefully, this is one candle and this is one candle. This is its high, its low. This candle is formed within it. So, these two of ours together will be one candle, correct? What we call a master candle or an inside candle. This rule also applies, okay? So where did it go, brother? My order block. It's here. I left it. Let me go back here. What happened in the market? There's another pullback here. After the pullback, I mark the last buying candle. Which one is the last buying candle for me? This one in the entire zone. Look, this is the last buying candle for me in this entire zone. Look, why? Because it has seen more buying than the previous candle. And this high has also seen more buying. After this, I haven't seen more buying in any candle. Okay, has it happened that the market has broken its high at any point, or has there been more buying? No, there hasn't been. So, for me, this is a buying candle. Okay, what have we just done? We've just marked which buying candles are there. Okay, which one is valid, which one is not? We'll figure it out later. Okay, a dramatic movement came from here as well. I'll mark a buying candle. Okay? Now, let's figure out which one is valid and which one isn't. Now, if you look at this entire zone, I'll move it aside. In this entire zone, these 4 candles, 1, 2, 3, 4, have formed for me, which are order blocks. We'll apply all our rules to validate them. And along with that, we'll see which order block is valid. Our first condition here is that the color of the candle doesn't matter. The psychology of the candle matters. The last buying candle before the downward move. So, we've marked that. Now, our second candle, the second rule, says that it should be near the buy FVG of the order block. Okay? So, let's start from the bottom. Okay, so this was our order block. Is this candle, right, buying? Yes, this candle was exactly an order block. We've marked it. Now, what does the rule say below this? There should be a FG. So, is there a FG here? The low of the first candle is anywhere here, the second candle is omitted, and the high of the third candle is in a downtrend. There should be a gap between them. So, is there that here? There isn't one here. So, this isn't a valid order block for us. So, shift ahead and take a look at where the FG is here. Yes, look, I see a very large FG in this candle, and I also see a buying signal in this candle. Okay, so what should I do? Instead of considering this as an order block, I'll consider this as an order block. Why? Because what does the second rule say? There should be a FG. Okay, so, I've marked it. Okay, I've marked it, brother. This was the last buying candle. I marked it. Or you can also mark this one because it's coming in. Okay, this entire zone is an order block. And you can mark this entire zone. This candle is the last buying candle before the UP move because not a single candle after this has broken the previous high. Okay, I marked this order block. What's the second rule? My FG should remain FG. This is the first, this is the second, this is the third. I've mixed these three candles here. And I've marked an FG here. Right? So what's here? It's FG. Correct? So this first and second condition is also met here. Is the second condition being met here now? This was an order block. What do you need along with the order block? FG. Do you see an FG anywhere here? Do you see a fair value gap? Why? No, because everything has been mitigated here. Tapping has happened everywhere. And here, in this zone, it's a mess. You don't have a clear direction. Like look here, it was clear. There was a gap. Correct? It was clear to you that there was a FG here. By the way, do you have it here? No. So leave it. Is there FG below this order block here? Yes, there is. Look, the FG is the low of the first candle, the second candle, the high of the third candle. Right? Along with this, is there FG here? If you look carefully, yes, there is. There's no FG. Look, is there an order block here? There's an order block. But is there FG? No, because look, after this, there's the high of the third candle. It's overlapping with the order block. So, it's already mitigated, right? And even if we shift it forward, what's happening? It has already mitigated everything here. So, will this be a valid order block for itself? Broke the high of the previous candle, means buyers came here. Okay, so what's our rule? The last buying candle before the down move. So I mark this candle here. Candle color doesn't matter. I mark this candle here. Then, what does my rule say? What does the second rule say? There should be an FVG with the order block. Here I got an FVG. Correct. Here's an FVG, the low of the first candle, the high of the third candle. Okay, what's the market doing? Look, the market is exactly tapping that one and falling. What's the market doing here? I tapped this one and it fell again. Correct? This is what happens. Also, what does my third rule say? If you want to find an order block in a downtrend, it should be in the premium zone. So, what did I do? From this entire uptrend to this downtrend, I placed an FPG here. The premium zone is above 0.5. I explained it to you. So, is this order block an FFG of mine falling into my premium zone? Yes, it definitely is. So what is it? This is a valid order block for me, brother. Okay, this is a valid order block for me. So, look at what the market is doing. Exactly where it's coming in. It's tapering, falling. And you see it falling dramatically. Okay? So, this is how to mark an order block. These are its rules. I also explained the inside bar. Now you'll ask why it didn't work. I explained the reason for that too. Why? Because, brother, this is your entire zone. If you look at this entire zone, let me talk about this entire zone. So, where are these order blocks coming in? They're coming in your discount zone. That's of no use to you. You need to look at the top. This is where the market comes in futures. So you have to react here if the market doesn't square up. Okay? Now, for this square down, you'll have to learn structure mapping. So go learn structure mapping and then come up to it. Okay? I'm talking about the entire structure. Now, let's understand this order block. This one we've marked as a zone. How is this order block working here? Okay, what did you do here? This was the market high. This was the market low. Okay? What's the first rule? Candle color doesn't matter. Right? Candle color doesn't matter. We took the last buying candle here. You'll say this is a buying candle. Okay? I explained to you that there's no FUG below it. So, it's not valid for me. You'll mark the order block below the FUG. So, here, F is my order block. This is the FUG below, and along with that, it's also coming into my premium zone. This order block, if you look carefully, my order block is forming above 0.5. The FUG is also overlapping with it. So, this will be my perfect setup. If the market comes back here to sell, okay? So, what happened in the market? Look exactly, the market fell, exactly below the FUG, and see how the market fell. Okay, so, this is exactly how rules work in the market. Brother, sit down with the rules. You will understand everything. Along with this, there is an additional rule for the order block. I will explain that, and I will explain the order flow. Then this lecture will end. After this, we will learn all the order blocks one by one, dedicated to each video, okay? When you need to mark an order block. What happens when the market is moving in an IDM? Your high is confirmed. When the IDM occurs, you should start marking the lower order block, FG. You shouldn't mark any order blocks until the IDM occurs, okay? As soon as the IDM occurs, start looking for the lower order block. Where is it? Sometimes the market doesn't even mark the IDM, it just keeps setting higher highs. So, after setting a higher high, whatever the first swing the market takes, like the swing here, is the IDM. Then, start looking for the order block here in the market. Okay? Start looking for the order block here. Sometimes, what happens is that 3 to 4 to 5 order blocks are created in one leg. So, which order block should you take here? After the IDM occurs, you should consider the first order block, the nearest order block, which is already in the uptrend. If this one fails, then you should immediately consider the last one. Okay? You don't have to pay attention to all the order blocks created in between. All those order blocks will act as a smart money trap. And for the new, smart money learning little kids, they will act as a trap. They'll sit on the order block and definitely react. If the market doesn't respect it, it will break it. If the nearest order block after the IDM, before the IDM, in the uptrend after the IDM, isn't respected by the market, then the order block will directly fall on the last order block, the extreme order block. Okay? How to do it for a downtrend. This market in a downtrend will make some lower lows, a swing high. It will do this. Once it's reached the IDM here, then find the order block above here and mark it. Find the FG and mark it. Breaker block, mitigation block. Look, right now you'll say, does the market fall only because of the order block? No, the market falls because of the mitigation block. It falls because of the reclaim block. It falls from the rejection block. It falls from the advance order block. It falls from the vacuum block. So, all of these things are one by one. Which one to use in which case? We'll learn about this in future videos. Okay? So, what happened from here? The market fell from here. Now, let's assume that this is a clear picture. You got a simple idea. There was only one leg here. This order block here is bound to fall. But what if the market continues falling, and your idea doesn't materialize? So, what happens? The idea happened here. Correct? The idea happened here. What do you have to do? This is the first order block here, and if there's a problem, you have to respect it. If the market doesn't respect it, then no matter how many order blocks you have in the middle, let's say there are no orders here, you don't have to do anything. You simply focus on the extreme order block. The market will come straight to it to tap it. What is the extreme order block? Where your check is about to happen. Again, if you don't understand the check, go watch the video and you'll understand. What will the market do? After the first item, if the nearest order block fails, even by mistake, the market goes straight to the last extreme order block. This is the fourth and final rule of the order block. So, we've understood what an order block is. How does FPG work with it? Which order block should we take? Which order block should we avoid? We've understood all this. Now, let's understand a little about order flow. Look, it doesn't happen that the market comes into buying mode with one candle. I mean, the smart money invests all its money in one candle and booms from there. No, it doesn't happen like that. Smart money wants to create an upside movement in the market, so they will place their buying orders on all the selling pullbacks. What I said was that if smart money wants to buy, then their buy orders will be placed on the selling pullbacks. Now, you may not understand what this is. I explained to you that if there's a seller, there must also be a buyer. If someone is buying, there must be a seller. The balance between these two is very important. If even one of them is lacking, there will be an imbalance order flow for us. Okay, this is order flow for us. Okay? What's happening with this? Why exactly is the market moving in reverse from here? Why? Because all the selling pressure being suppressed by the big players here, people are selling here. Smart money is buying here, buying here, buying here, buying here. Suddenly, there's an explosion. What's happening here? For all the people selling here, smart money is buying here, buying here. A dramatic upward movement. The same thing is happening here. So, this is order flow. That is, the last pullback before the UP move. Right? How does this happen in an uptrend or a downtrend? The last buying pullback before the down move. This zone is my order flow. This zone is my order flow. Right? This entire zone is my order flow. What is the market doing? If you look, it's coming. The market broke. There was order flow here. After breaking, it's tapping back on that order flow. It's falling. The market created that order flow here. Again, it's tapping that order flow. It's falling. Again, whatever order flow has formed here, what will the market do? It will tap it. Again, it will fall from here. And where is your order block located? Your order block, brother, is a candle within this order flow that creates a dramatic downward move. Right? This is your order block. Your order block is located within any order flow. Is that right? Understand this. The market exactly falls from here. Right? And the last buying candle on the upside. So, what happens in this? Look, I explained to you that if the market is to go down, if the big players want to take the market down, what will they do? They will place a selling order on every buying order. Here, people will buy, right? Someone is buying, so someone is able to sell, right? Here, the big players will keep selling, and such a movement will occur. A dramatic dump will occur from here. What will happen here is that there will be buying by retailers. Smart money will dump the market here. Okay? So this is the order flow. Order blocks are always within the order flow. Now that you understand this, you've understood everything you need to understand. To fully understand order flow and order blocks, let me move this aside a bit. Here's a 3-minute chart of Bitcoin. If I were to ask, which order block is this? We left this order block here. We considered this order block, correct? Sorry, we considered this order block. I've explained the reasons why, go and check them out, okay? If we were to sell the market from here, there must have been some order floor before this where buying occurred. What we've learned is that the last buying pullback occurred before the UP move. So, where did the buying occur here? Look, the buying occurred from this zone to this zone, correct? Now you'll ask, why? There was a pullback here too, but if you look carefully, this pullback is within this candle. The closing is found within it. So, I'll consider these 3 candles that have formed as a single candle, which we call the master candle. The entire game is unfolding within this candle, correct? I'll call it a single candle. This was a pullback. After this, its structure broke, correct? So, this is the entire zone that will act as an order block for me. Okay, so, I've marked this. Okay, I've marked this. What is the price doing now? Look, the price closed below this here. Okay, look, it closed here below this order block, correct? What is the market doing? The next candle, after this, when the market comes back here, tap this again and say, oh, where did it go? After closing this, tap this again and it's falling exactly from here. Why did it fall from here now? There was an order block here. There was also a FUG. Why didn't it fall from here? There are other reasons for this, which we call breaker mitigation. I'll explain all these concepts to you in the upcoming lectures. So, stay tuned. This is going to be a power-packed learning experience, okay? The lectures are getting longer. Why? Because there are reasons behind it, okay? So, let's also look at this zone to see where the order flow is. See, what did we understand here? The last buying pullback before the down, this is a candle. Why? Because there's a FUG here, and all my rules are being met. Broken it. After reaching this point, it is falling again from here. So, the market respects order flow, saying this is order flow. Understand that, and order blocks are created within the order flow, okay? So, I hope you understand this completely. If you haven't, rewind and watch it again. Until you do, understand it, because I don't think you'll find it in easier language than this. And if you still don't understand, then come live. I'll teach you live with me, okay? I'll clear all your doubts there. So, we understand that this is order flow. This is an order block. You made an entry here, meeting all the rules, okay? This was your stop loss, according to your order block, and this was your stop loss, according to your FG. Correct? This was your stop loss. You considered this stop loss, okay? What did you target? Nearest liquidity, nearest swing point. You get a good risk reward here in the market, brother, okay? We'll explain the rest in detail later in a live session. Right now, we'll just discuss this. Let's understand it. First, understand where it happens and how it happens. Then we'll move on to the entry model, okay? Now we've learned all the rules, including which order blocks are valid. I'll tell you how to trade in this. Look, our first rule is to execute it after a breakout structure. To understand all this, you'll have to watch my previous video, okay? So go and watch that. After that, if there's an idempotent order block after the breakout structure, mark it. This is our rule. Now, our condition has been met here, okay? Which one? The last selling candle before the UP move, okay? Our UP move has occurred here, okay? So, this is the last selling candle. The color doesn't matter. The psychology of the candle matters. There should be a FG above the order block. Here, the first candle, the second candle, and the third candle are left. There's a gap between these three. What has the market done? Look at the market. Exactly. What did the market do after forming an idea here? It made a high, then it came back and formed this idea of a higher low. As soon as it formed this idea, what exactly did it do from this first pullback? First order block. The market exactly tapped here, and broke this high. Okay? So how do you enter here? When the market comes to your order block, okay? Then you enter. Where do you place your stop loss? You should keep a little buffer below the stop loss or the zone, okay? What should you target? It's the nearest high, okay? You should target the nearest high with liquidity. You can see how you're easily getting a trade of 1.6% here. I'm talking.
So guys, that's the today video for SMC learning order block, bullish order block, a bearish order block, how order blocks works, and for example in overflow or premium zone, discount zone, and the rules, and in bearish and bullish. So we learned basically all of these today. SMC video we learned, and that's it for today SMC video.